Biden's new tax plan kills Roth conversions? Well, not exactly. Let's talk about it. Hello, everybody. Joe Weber coming at you, and I am being bombarded by emails from my clients with concerns that Biden's new tax plan is getting rid of Roth conversions, and that is not at all what's happening. So I want to start with the basics. We'll work our way up because this is a lot more of a complicated issue than it seems to be on the surface. And I've read the articles, and it seems like, yes, the people writing the articles have a cursory knowledge of Roths and IRAs, and they do an okay job in explaining this, but a lot of it is lost in the translation. So let's talk about a Roth versus an IRA. So if you put money into an IRA, you're putting in pre-tax dollars. That means you don't want to pay the tax right now because for whatever reason, you believe your taxes will be lower in the future. And I'm here to tell you that's not the case. And if you haven't done the numbers, please get a hold of me because I can show you how that is definitely not going to be the case for the majority of Americans out there. So for the IRA, you're putting in pre-tax dollars. For a Roth contribution, you're putting in after-tax dollars that have already been taxed, and now they're inside the Roth and they grow tax-free. So IRA, pre-tax, grow tax deferred. Roth IRA, after-tax dollars that grow tax-free. Now, where this gets confusing is what the legislation is proposing is that you will not be able to convert. Now, let's talk about conversions here for a second. Conversions are where you take IRA dollars and you move them over to Roth IRA dollars. You pay those taxes. So you take that pre-tax money and you convert it to a Roth and you pay the taxes now on that conversion. What the proposal is saying is that after December 31st of 2021, this year, you will not be able to convert after tax dollars. So I can see how that would be confusing because you think, well, Joe, you just said that after tax dollars are what you put into a Roth. So why would you want to convert them? Because here's what's happening. There is a strategy called a mega backdoor Roth. And what this is if you're contributing to a 401k, and if you're under 50, you're putting in about $19,500 a year. If you're over 50, you can put up to $26,000 a year. That's the max. That's as much as you're allowed to do. But if you want to save more dollars, you're allowed to, by tax law, only about 30% of 401ks allow this, but by tax law, you're allowed to contribute after-tax dollars to your 401k. And what this means is it's not pre-tax money going in your 401k, it's after-tax dollars going in your 401k, but those dollars will grow tax deferred. Unlike a Roth IRA where after-tax dollars grow tax-free. Completely different story. So if you are one of those lucky few who have the ability to contribute above $19,000 a year, if you're below 50, above $26,000 a year, if you're over 50, then you're allowed to contribute up to $58,000 a year or $64,500 a year if you're under 50 or over 50. And those after-tax dollars would not make sense to leave in a traditional a traditional 401k because you paid tax on some of it and then some of it's tax deferred. So what people were doing was they were making these after-tax contributions and then immediately converting those contributions over to Roth. So it was a backdoor. It was a way to get into Roth IRAs and put large amounts of money into Roth IRAs up to $64,500 a year. Now, that number is also a bit deceiving because that's after you take into consideration your company match. So let's say your company is matching you, let's say $10,000, you're only allowed to put in $54,500 and $26,000 of that $54,000 was your initial after-tax Roth contribution or your pre-tax 401k contribution. And again, I know this can be confusing, but this at the end of the year of 2021, if this passes, and it probably will pass, all it's saying is that mega backdoor Roth conversions are dead. Now, there is an addition to this that's saying after the year 2032, which If my math is wrong, that's over a decade away. After 2032, if you make over $400,000 as an individual, and I think it was $450,000 as a married couple, then you can't do Roth conversions. So hey, great news. We have an entire decade to get Roth conversions done. And this is what I've been saying on this channel for years and years and years, that Roth conversions are worth it. That's why the government's going after it. I mean, there's a reason that the government is saying you can't do this anymore, because it's so good for you. It's so good for you, the listener. And so they're trying to put the kibosh on it. But again, that's only for people making over $400,000 when they want to do the conversion. If you retire and do conversions, you're probably not making $400,000 a year. So this is not killing Roth conversions. There's some other parts of the legislation that talks about if you have an aggregate retirement savings of about $10 million or more, you'll have to take distributions regardless. But again, who cares if that money is all Roth? Then it's a tax-free distribution. It's not a big deal. The other part of the plan that this does get rid of is the regular backdoor Roth contribution, which I've talked about this on my channel as well. If you make over certain income threshold limits, I believe it's 179,000, or I'll pop it up on the screen here what the income limits are. You're not allowed to make a Roth contribution. So what people were doing is they were saying, okay, I can't make a Roth contribution, but I'm allowed to make an after-tax IRA contribution and then convert it. Those would also go away because they'd be getting rid of after-tax Roth. They're after-tax Roth conversion. So if all you're doing is making traditional Roth contributions, you're good. If all you're doing is converting IRAs to Roth IRAs or 401ks, pre-tax 401ks to Roth IRAs, you're good. It's just for those few people who were making massive contributions to their retirement accounts above that $26,000 limit or that $19,000 limit. Those are the only people who are going to be affected by this. So let's take a deep breath. And this is why I say it's so important to read the article, not the headline, because these headlines can be really confusing. So if you're planning on doing Roth conversions in the next decade, you're good. If you want to do Roth conversions after 2032, it looks like if you make over $400,000 a year, you probably won't be able to do that. But that's 10 years down the road, and who knows what'll change in the White House and Congress by then. That's nothing for us to worry about today. I hope this cleared up the issue for you. If you like videos like this, make sure you subscribe to see more, and I'll see you next time.